So we're going to switch gears here. This is our affordable choice plan. So this is also a hospital indemnity, but it works a little bit different than our the hospital indemnity select plan that I just went over. From the standpoint of, it's what I refer to as a hospital indemnity on steroids. It still offers that it's still a fixed indemnity product that covers. It can be used to cover major medical. It can be used as a standalone alternative to an ACA plan. Do note that it's not credible coverage, or it can be used as a wraparound an ACA plan. But what it does is it has a lot of additional benefits that we'll go through. It's not just for hospitalization. There's surgical benefits. There's injury related benefits. So it's really just a lot more robust hospital indemnity plan. So
can I interrupt you again, Aaron?
Sure.
Everyone knows, or most everyone knows, Galen Hendricks. And so Galen, the queen of the bundles, this is her number one alternative. And we've heard of Sedera, which is, a health sharing. People don't necessarily like Sedera. They don't like the idea. This is the number one, second, or first choice for people that on the ACA that can't afford the ACA right now. That the bronze plan might be too much or something else. This plan and you can go into it, $5 million protection. This covers someone and protects them. So it's one of the number one alternatives for people to say ACA, can't afford that right now because the subsidy went away. So that's why it's important you go into this and we learn this more, because I didn't understand this as much until Galen went through that a couple weeks ago with me. So sorry, but I just want to emphasize, I can't emphasize that enough looking at this, how that's a good alternative for our ACA people.
I mean, back years ago, when the ACA started coming out, the first year, I think the pricing was very good. But after the first year, premiums really went up. And by the third year, people were just like, I'm not going to pay. It's some people, I work with business owners as well. So some of the business owners were like, I'm not paying that type of money for a huge deductible and a huge max out of pocket. Like, I'll just go without insurance. And so, there's a lot of people that feel that way. There's a lot of, this plan has sold well all across the country for a long time. Certainly the sales have picked up more recently because of all the changes and what the market is doing, but it's an absolutely fantastic plan. So when we look at, individuals that can benefit, it's really those who are looking for those alternatives to insulate themselves from the unforeseen costs that can get protection in place without breaking the bank. So that's all the things that kind of, Paul just mentioned. When we break it down, it is, there's really kind of a few buckets that this falls into. So individuals that I just mentioned, one that make good money, not qualifying for a subsidy on the ACA plan. Small business owners, real estate agents, contractors, insurance agents, they're looking for something else because of that expense. Second bucket of individuals are people who purchase those. So Paul mentioned are, people who are, when we're talking about hospital indemnity, being a great plan for those individuals as well. And it absolutely is. This can also be another option. So it really is dependent on, their budget that they have that they can use towards healthcare. So if they want a little bit more robust option, this is also a great plan for them. They can use this as a wraparound their chosen ACA plan. And as we go through the benefits, you'll see some of the differences here, because it's not just for that hospitalization. Third bucket of individuals is what I refer to as spouse in the house. So you got one individual turning 65. The spouse is a few years younger, so they're not able to go onto a Medicare plan yet. And so they use this to really bridge that gap. All right, so a few things about it. So again, issue ages 18 to 64, they cannot keep this plan once they turn 65. So it's guaranteed renewable up to age 65. So no matter what happens health-wise, we're not going to kick them off. It is underwritten product, so we do ask medical questions before they're eligible for coverage. However, all of our products are simple issue, no paramed, no blood draws, nothing else needed in order to prior to being approved. We simply just do a prescription history check. and we do an MIB poll. Other than that, that's pretty much it. Benefits are available immediately. This is day one, $1 coverage. There's no deductibles, no co-insurance that associated with it. You do need to have either a social security number or ITIN in order to be accepted to the plan. That is standard across all of our products. They need one of those two. We have individual and spouse, individual and children, family, and child-only policies available. So again, it is not a major medical plan. It provides a fixed cash benefit for hospital confinement or specified medical or surgical events. The benefits are paid as they are stated on the schedule. So without regards to the service, the cost of the services rendered. So let me give you an example of how this works. Let's say you're hospitalized and the bill for the hospital confinement is $4,000 for the day that you're in the hospital. And you'll see this on our next slide, but I'm going to use our Elite Plus as the example. If you had that plan, it's going to pay $6,000 per calendar day for hospital confinement. So in this scenario, the plan is going to pay you $6,000. It doesn't care that the cost of that hospitalization was $4,000. It's still going to pay you $6,000. So you went, you made $2,000 on your hospitalization. Now let's say that hospitalization cost was $8,000 instead of that $4,000 that I mentioned. Again, we don't care. We're still paying you $6,000. So in that scenario, you're going to have to come out of pocket $2,000. So again, it's a fixed cash. It's a fixed indemnity product that's going to pay you based on the schedule. So let's get into that a little bit more and show you the benefits here. So I'm going to use the Elite Plus as we go through our example here. There's a lot of information, so I'm going to move pretty quick through this. Again, you can certainly throw in some questions if you have it, but I'm going to use that Elite Plus as our model for the conversation today that offers an inpatient confinement for $6,000 benefit a day. So let's talk about that confinement for a minute, because I want to draw a distinction between the inpatient hospital confinement and the observation benefit, because they are not the same. So when you think of hospital confinement, think of kind of worst case scenarios there, life-threatening, something that might be heart attack, stroke, paralysis, major burns, organ failure, et cetera, et cetera. So something that you cannot, or at least should not, leave the hospital due to that condition. So that is really what that confinement looks like. The confinement benefit, as well as the observation benefit, is triggered after the client has been in the hospital for 24 hours. So this is required before we pay a benefit on those two benefits there. The observation benefit is 50% of the inpatient hospital confinement. So if you look at the upper right-hand corner of your screen, it's going to show you that it's 50% of the inpatient hospital confinement benefit. So in this scenario, Elite Plus, it's $3,000 per day of benefit. Now, building benefit injury reimbursement. Stay with me here. I'm going to walk through this. Don't be thinking about your plans for the weekend. I want to make sure you understand how this works. So again, using Elite Plus for our example, it is going to increase at 25% each year for that building benefit injury reimbursement. So years 2 through 5, that increase is going to increase up to $12,000 in year 5 for inpatient hospitalization as it relates to an injury. So it's got to be an injury-related hospital stay. Now let's assume that you have a client that's in year 2 in their policy period. They have an accident or injury, and as a result, they are confined to the hospital for those injuries. On the Elite Plus, in year 2, they're going to receive $7,500 per day that they're confined. So again, it's injury related, and it continues to build up to that $12,000 max in that 5th year. Maximum calendar year benefit for our inpatient hospital confinement and building benefit injury reimbursement is $1 million. Lifetime max is $5 million. So I know most people, first thing, $1 million, $5 million is quite a bit. But I know some people are like, well, hey, Aaron, I know that things are expensive, and what if they max out the plan? Well, first thing I will tell you is that we're not going to kick them off, right? So it's not going to be something that we're going to kick them off because they start having issues. But, it is possible that they could exhaust the benefits depending on what happens. So I remember back to the ACA when the ACA started, and they had some short-term medical plans that would cover people for 12 months before they would re-underwrite them. That was great because then you could, if something happened, you'd be able to put them onto the ACA when that enrollment time came around. I don't know where it's at for your particular state, but I know in the state that I sold in, it went down to 6 months and went down to 3 months, which really put people in that precarious scenario because, again, every 3 months they underwrite, they could kick them off the plan and say, yeah, we're not going to cover you anymore. Well, again, we're not going to do that. But if they are starting to really kind of maximize the benefits, I would say that when it comes time to enroll them on the ACA, you go ahead and do that. So this is as you work with your clients, these are going to be conversations that you continue to have, and something that you can do in the scenario where there is a potential for maxing out the plan. Okay, so hospital admission benefit is for the first inpatient hospital stay for the calendar year. So the first time you have a client that's admitted to the hospital in that calendar year, this is where the hospital admission benefit is going to kick in. They do not have to wait a 24-hour period to receive this benefit. So if they're in the hospital within the first 24 hours and are admitted to the hospital, then this benefit is going to be triggered. But remember what I said earlier about the confinement and observation. When it comes to those two benefits, that is triggered after 24 hours has passed. So they could be in the ER, whatever the case may be. We're not going to pay that hospital confinement or observation until they've been there for that 24 hours. But the hospital admission benefit is slightly different, and it is a first day benefit. So we pay that one time per calendar year that they have access to. So when we look at emergency room and urgent care benefit, I'm just going to kind of lump these two together. Nothing really fancy here. It's a per day benefit with a maximum per calendar year. $300 for a day for 2 days, a calendar year for the emergency room benefit, and $300 a day 4 times per calendar year for the urgent care benefit. All right, let's spend a little time to go over these surgical surgery benefits here. So the policy fee schedule is derived from Medicare.gov fee schedule. So that's what we use as our baseline. So for an example, for a given procedure, our claims processors look at the Medicare table, and they see that Medicare is going to pay $500. If you have an insured under that Elite Plus, we're going to use a 3 times multiplier. So we're going to, based on that policy fee schedule, they're going to receive a benefit of $1,500. Now, something I will make note of is that the Medicare tables are state specific. So market price in Texas is going to be different from Wyoming or Alabama or Miami, Florida, or Chicago, Illinois, et cetera, et cetera. If your client asks how we determine the cost of the procedure, what I communicate to them is that we use the Medicare tables, and based on that level of their plan, we use a multiplier for that surgery benefit. Ambulatory surgical benefit, if it's performed at the ambulatory surgical center, outpatient hospital facility, the insured is going to receive $3,000 benefit for the Elite Plus, and also be entitled to the benefits available for the surgical and anesthesia. We have doctor's office visits. This is a per day per calendar year benefit. So this is not policy year. So it doesn't matter really when they start the coverage, so to speak. During the course of the year, it's going to offer that X amount of office visits per calendar year. So we do have rollover that's available on this. They can carry over 5 visits per calendar year, but on the Elite Plus, they get $200 for 10 office visits a year. If you have multiple people on the plan, so if you have a family plan, each person gets their own bucket of days. They don't share those days. It's each person, again, Elite Plus, $200 a visit for 10 days for the calendar year. What you're not seeing here is chiropractic. The plan can be used for that. It's just going to pay the per day doctor office visit. Chiro, we do cover a wider spectrum than just manual subluxation. So for the chiropractic visit. Now, as far as the prescription benefit, this is a per day benefit as well. So just want you to understand how this works. So if you have a client that, let's say they get a couple different prescriptions filled, let's just call it 2 prescriptions, and they get them filled on the same day. As So let's say Monday they go in and they fill those 2 prescriptions. The benefit that they're going to get is $75. Now let's say they filled 2 prescriptions and they filled one on Monday and one on Tuesday. Well, they're going to get $75 for each one. Okay, so that would be a total of $150. Don't overcomplicate this. I just want you to know how it works. If a client is taking a single drug and they're taking it every single month, it's going to take them it's going to take them 10 months, right, to receive that total benefit. But instead of changing someone's, even in the case where they're taking 2, maybe filling it on different days, I don't know. I mean, I personally wouldn't have them change their purchasing habits. They're going to make that money up in that 10 months from those prescriptions, regardless if they fill them on the same day or not. So I just want you to know that if they do fill it on 2 separate days, they would get that benefit per day. Hopefully that makes sense. Okay, so when we look at the services here under the outpatient medical benefits for preventative services such as colonoscopy, PAP, PSA, we're going to pay these amounts based on the procedure. Under laboratory services, we see surgical pathology, other laboratory services. These are going to be the amounts we are paying for what we consider covered services under the plan. If you have a client that files a claim with us because they received a colonoscopy, lab work, physical therapy, or one of these other covered services on the plan, this is what they're going to pay. We're going to pay for each one. Now, the outpatient, I'm going to use a scenario here on the outpatient medical benefits and how they work with the plan. Let's say we've got a client, we'll call him Joe for the example, and he goes to a doctor's office visit for preventative colonoscopy. That colonoscopy, unless Joe is a really bad dude, he's probably going to want some anesthesia for that procedure, as I doubt he's going to want to be fully awake during the colonoscopy. So this is going to trigger the ambulatory surgical benefit when that outpatient surgery is surgery is performed in an ambulatory surgical center or outpatient hospital facility. It doesn't matter if they're having this procedure in a day surgery facility or if it's going to be in that hospital environment. The benefit's paid when we consider the all-in cost for the particular procedure. With the colonoscopy, we're going to get the preventative benefit of $600. They're also going to get that $3,000 ambulatory surgical benefit that we talked about. So right there, we're looking at about $3,600 in benefit. Now, let's say that while the doctor is performing the scan, they identify a polyp, tumor, lesion, whatever that might be. They need to do a biopsy because they need to do a removal of something in that procedure. That's going to trigger that surgery benefit. So they get the $600 benefit for preventative. They get $3,000 ambulatory surgical benefit, which stacks on top of that. And since surgery is needed for the removal of the, let's call it a polyp, they're also going to receive that surgery benefit. So let's assume based on Medicare's table, that cost, I'm going to use that $500 I talked about earlier, staying with that Elite Plus, they're going to get a benefit of $1,500. So the $500 is the $300, 3 times multiplier. So in total for all of those things, well, let me cover this first and then I'll get there. Daily, then they're going to, in addition to that, so you got the $1,500 surgery benefit, but they're also going to have a assistant surgeon benefit and the daily anesthesiologist benefit that are both going to connect to that surgery benefit as well. So again, if we use the surgery benefit of $500, then the daily assistant surgeon benefit is going to be $100 or 20% of that $500. And the same applies to the anesthesiologist benefit at a slightly higher rate of 25%. Now we do not use a multiplier on that. It's just that straight dollar amount. And so the total benefit that they would have received there is what, $3,600, $4,600, $5,100 plus the $100 for the surgery benefit. So I'm sorry, for the anesthesiologist benefit. Something to note on laboratory services, these are a per day benefit. So going back to good old Joe, if he goes and gets 5 different labs done on a particular day, he's only going to receive 1 benefit on that day for 1 lab. So again, just know that it's a per day benefit. It's not per procedure on that. Radiology services, the amount that you see listed is going to correspond with the services on the left. So MRI is 700, PET scan 700, CT scan 700, mammogram 300. Other radiology tests are 250. Radiology is obviously a pretty broad bucket, but I know something that comes up that's not specifically listed that I do want you to know falls into that other category is EKGs or EEGs, whatever they're calling them these days. Those get lumped into that other radiology test. And again, I hear people asking that quite often, so I just wanted you to know. Calendar maximum benefit for all outpatient medical benefit ranges from $4,000 on the Classic up to $8,000 on the Elite Plus. Also, something to note, massage therapy is not covered on the plan. Ground ambulance, an air ambulance, pretty self-explanatory. I'm not going to spend a whole lot of time there. It's going to be based on two daily benefits per calendar year for ambulance and transportation. It's a per day benefit. Allergy shots and immunizations. This is for child only. We do not pay for injections for adults, so just be aware of that. There is a cancer benefit that's available on this policy for radiation, chemotherapy, immunotherapy. Per day benefit is for 40 calendar days per year. So let's say you have somebody on the plan and they receive treatment for this. It is a per day service benefit. So they're going in twice a week for treatment. On the Elite Plus is $2,000 a day, which would equate to $4,000 a week. When it comes to these types of events, we do not so clients have time to go ahead and submit for these claims. We know there's a lot going on in people's lives. We do not expect them that they're going to come home and want to submit these right away. The general rule of thumb is that they have 12 months to submit them. I certainly, wouldn't wait till the last minute, but most people, what they do is they typically submit these quarterly. But, I just want you to know that we're not going to be, all over them for not submitting them immediately. We recently added our specified disease rider. So this is what I was talking about earlier, which helps cover expenses incurred for healthcare services or supplies needed to diagnose or treat covered conditions or procedures. There are 14 covered conditions on this rider. They have 4 deductible options that are available, 25, 50, 75, and 100. And they have 2 options available for the calendar year maximum, which is 250 or 500,000 available on the specified disease rider. So this is an additional rider that can be added. I'm going to give you a couple different examples here of how this works. So example 1 is going to show the base plan, how it would work with no rider and no network discounts. And then we're going to kind of build off that as we go through. So let's assume we've got Michael here. The bill charges is $110,000, no network discount, actual charges $110,000. The AFC base plan pays $30,000 towards that lump sum bill. Amount remaining after base plan is $80,000. No specified disease rider, so amount owed to provider by insured is $80,000. Now let's take example 2. In example 2, we're going to show what it looks like if the rider was added with no network discount. So same initial amounts there. What you're going to notice is that in that red is going to be what the deductible that's paid, which is that $25,000, but then the provider is going to pick up that remainder of that $55,000 with that specified disease rider. So what they would come out of pocket instead of that $80,000 is that $25,000. Now we're going to look at the same example. So all things staying the same. With a network discount, it's going to lower the network discount is $16,000. Actual charges then turn out to be $94,000. Same $30,000 that the AFC base plan is going to pay. Amount remaining after that, the base plan is $64,000. Minus that deductible for the specified disease, and the amount remaining that to be paid to the doctor, to the provider, is $39,000. The last one is going to be if the deductible is not met. So we're going to see different numbers here. So bills charged $25,000, network discount $2,000, actual charges that $23,000. The AFC is going to pay $10,000. Amount remaining after base plan is $13,000. So the deductible is going to be $13,000. As time continues along, as we look at that example 4, obviously, if they get to a point where they max out that that deductible, then the rider is going to kick in, like some of the examples that you've seen previously. So this is where our plan is available across the country. So again, as you see in that available in Alabama, we did add some states to this rider. So we've got Mississippi, South Carolina, Maine, Michigan, Minnesota, Iowa, Missouri, and Nebraska to add to this. So those are the specified disease rider has been added to those also additional states. So processing applications, several ways to do this, but I mentioned our quote and enroll system. So vast majority of people are doing it that way. Makes it really, really quite simple. But you can fill out a paper form if you want. There's no problem. You can fax that to us. You can mail it to us. Whatever works best for you. If they're changing, so there might be times where someone's wanting to change the benefit amount on the policy. So this is done by using a new paper application. Make sure you use the existing policy number and what the desired policy change and new benefit level request is. The effective date of the new policy should coincide with the termination date of the previous coverage. We will need new signatures on this. Now, lowering the benefit amount can be done at any time. So anytime during the year doesn't matter, but if they're transitioning to a higher benefit amount, they can only be done during the policy anniversary, and it is subject to underwriting and pre-existing condition period. So the pre-X is only going to apply to the increased amount if they have already satisfied that pre-X on their initial policy. We're only going to have that pre-X on whatever that increase is in benefit. If they don't qualify for the increased benefit, we are not going to terminate their other coverage. They can continue to remain. So if something happened, we're no longer willing to underwrite it for that increased coverage. They can remain on that policy. Again, we do not kick them off because of their changes in health. Coverage options: individual spouse, individual and children, and individual and family. Family rates do include up to 4 children. If they have additional children, what they're going to need to do is really pick their favorite ones. I'm just kidding. They can add additional children, and they can be added at the child only rate. So they don't have to pick their favorites. Everyone can be added. As I mentioned before, for family or individual spouse coverage, the premium is going to be determined based on the age of the oldest applicant upon that signature date. We do have for underwriting, we do have a build chart. Again, simple issue process. A few questions on an application. You submit that, but this is all available in the agent field manual as well. When you are in the quote and enroll system, just so you know too, on the right, I mentioned when you're writing a hospital indemnity on the right-hand side of the screen, it's going to tell you those out-of-pocket costs on a hospital indemnity. So those Medicare Advantage type clients. If you scroll down a little bit there, it's going to have our agent field manual and our brochures right through the quote and enroll system. So you don't have to toggle back and forth to different places. Anytime you need that agent field manual, it's literally right there at your fingertips. You can take a look at that because inevitably there may be some questions that the client has or maybe that you have that you need answered. We just want to make sure that it's available for you in that system. Processing claims, there are several ways to do this. The only thing that we really don't accept is smoke signals. We've got a portal that the clients can use. They can fax us the claim, so they can set up their online portal, go in there and submit that way. They can fax us the claim form. We also have easy upload, so they can have an app on their phone where they can download it. We even have a QR code. If they didn't want to download it to their phone, they can scan the QR code. That allows them to submit it that way. They put in their policy information, snap a picture of the claim form, and submit it to us that way. So several different ways in which they can do that. We just want them to, have. We want to have as many ways as we can to make it easy on them, so it makes it a little bit easier on you. Some additional benefits that are available on the plan. They have access to the First Health Network, which is an Aetna-backed network. They do not have to use a network doctor, but they can stretch their dollar a little bit further if they do that. As you saw in the example with the specified disease rider. So they have access to over 810,000 physicians and healthcare professionals there. A couple of the other things that are really agents have come up to me and say, hey, I use Direct Labs and I use Green Imaging. So if you need tests done or imaging done, the Direct Labs and Green Imaging are really, really cost efficient. So if they use those, they're going to get a bigger bang for their buck with those providers. I mentioned our ACES team, so I'm not going to go through that again, but they are available to you again if you need any help. That number, real quick, is 800-369-3600. I'm just going to finish up with this and see if we do have any questions. I know we're a little bit over, so sorry. The Affordable Choice does have a lot of information involved with it, but we do two. So in addition to the commissions that you make, we do 2 trips a year that you are eligible to qualify for. These trips start on February 1st for qualification. And so we just started about 48 days ago and run through January 31st of the following year. The individuals that won the President's Choice this last year will be going to Los Cabos, Mexico, May 17th of this year. And then the individuals who won the Chairman's Club will be going to Madrid, Spain in September. So these are also eligible. You got plenty of time to qualify. We do run additional incentives throughout the course of the year. Last year, we did 2 additional incentives outside of the trip. So to help agents earn more money and sell different products with us. So those are all available to you as well. And then again, I'll leave my contact information up here. See if we have any additional questions, but I appreciate you guys spending the time with us today. I know there's a lot of companies that are out there that you can choose. We really do work towards earning the relationship. So if there's anything that I can do to better serve you, let me know. If you need anything, don't hesitate to reach out. I really do appreciate it.
Aaron, thank you so much. Did anyone have questions for Aaron before we end? Paul, thank you for setting this up. And Aaron, this was so informative. Thank you so much for being with us today.
Sure. I know I threw a lot at you, but again, I think it's a good introduction in getting you, really to have a better understanding of them. If you guys do have questions, I will tell you again, reach out to the Alabama Health Guidance, reach out to Paul Todd. If you don't have my contact, you can reach out to me. If you didn't grab it now, you can reach out to me as well. More than happy to help in any way.
I have one quick question.
Yeah.
Do you have anything that's kind of ready for like a presentation if I wanted to have a small group of my clients in and do this? Do you have anything that's kind of ready to roll that we could use?
We do have some of the brochures and stuff that you can do. So we do have that. As far as a client facing, really it's the brochure. I can certainly provide you with that. I think there's a lot of pieces that you can take out of that. I'm happy to give you the this is recorded, so you'll have the slides. I'm happy to provide you with the slides. Again,
that would be great.
Yeah, I have no problem with that. Just I can't tell you that you can use that as a client-facing presentation because this is really for our agent field, but I'm happy to provide them to you so you can brush up your knowledge, expertise on it. And Marie, I appreciate the question. And then seriously, if you need anything, just give me a call and I can help guide you. But I'll provide that information out to Heather and Paul, and they can certainly get that to you.
Okay, thanks so much.
Yeah.
Well, thanks again, and we appreciate you being here today.
Glad to be here. Have a great day, everybody. Enjoy the rest of your week.